Terra community revives Luna token, Binance raises $500 million fund to invest in Web3 startups, Ethereum set to undergo massive upgrade in June. Hi there, please kindly support my channel by clicking on subscribe button and on the notification bell for more updates. It's been a tumultuous year for investors, but it's been even more so for those with a stake in crypto. Bitcoin's price dropped by more than 50% from its all-time high of $68,000 in the first half of May to its lowest level in 6 months. Ethereum followed Bitcoin's lead, and so did just about every other cryptocurrency. The crypto market, which has been tracking with the stock markets lately, has been a casualty of the broader market sell-off of risky assets as investors wrestle with high inflation, the war in Ukraine, and shifts in U.S. monetary policy. Although not usually correlated to stocks, the crypto and stock markets are rising and falling in similar patterns. The dramatic crash of Terra UST, one of the largest stablecoins, and its sister currency Luna also made matters even worse, experts say. Stablecoins are meant to track the US dollar and offer a stable medium of exchange within the crypto markets, so investors don't have to incur fees by moving US dollars in and out of the market. So, it was a big deal when Terra USD depegged from the US dollar on May 9th and crashed to as low as 9 cents. While the crypto market has had a slight rebound since the crash earlier in the month, some experts are warning the worst may be yet to come and Bitcoin's price could drop even further. Sometimes bear markets can last up to several months, Charlene Federico, a crypto expert and founder of Guidify, recently told Next Advisor during an Instagram Live. Some people track the 20-week average for Bitcoin, and according to that gets us in the $20,000 to $30,000 range. I don't know where it's going to go, but based on past trends, we've been in that range. The big crypto market crash is just the latest reminder for investors that crypto assets come with extra risk and volatility, especially in times of economic and political uncertainty like we're in now. Either way, experts advise not to make financial decisions based on news-related panic or hype. Here's what investors should make of the latest crypto news. The Terra community recently voted to relaunch a new version of its collapsed Luna token, but not UST, the sister stablecoin that lost its 1-to-1 ratio with the dollar earlier this month. The newly revived token is currently trading on several exchanges including Bybit, Qcoin, Huobi, and Binance. However, the new token, which investors are calling Terra 2.0, is already off to a bad start. After reaching nearly $20 on Saturday, Luna dropped as low as $4.39 within a few hours, according to CoinMarketCap data. It has since settled at a price of around $8.70. The world's largest crypto exchange is launching its own venture capital fund. Binance venture arm Binance Labs announced it has raised $500 million to invest in companies building Web3, securing capital from institutional firms DST Global Partners and Briar Capital, as well as other unnamed equity funds, family offices, and corporations that are limited partners. Web3 is typically described as the next iteration of the internet based on blockchain technology. Binance's new investment fund comes at a time when the crypto market is struggling at large, with Bitcoin and most cryptocurrencies down sharply since the start of the year. After several delays, Ethereum's massive software upgrade could be happening sooner than most expected. Ethereum developer Tim Biko recently announced in a tweet that the network's transition from proof-of-work to proof-of-stake could happen as soon as June 8. It's a big deal for the network because it will change how transactions on Ethereum are ordered, making it more efficient and sustainable for widespread use. Bitcoin is the largest cryptocurrency by market cap and a good indicator of the crypto market in general, since other coins like Ethereum and smaller altcoins tend to follow its trends. Even though Bitcoin recently set another new all-time high, it was a pretty normal uptick for the crypto, which is notorious for its volatility. That's not to say investors should take swings in either direction lightly, and this is also why investing experts recommend not making any major investment changes based on these normal fluctuations. Cryptocurrency is still very new, and everything from innovation to regulation can have an outsized impact on investors. Here's how you can invest smartly, regardless of what's making news or Bitcoin's price swings. How investors should deal with volatility. Cryptocurrency volatility is nothing new, and you should be comfortable with this if you decide to invest. Volatility can be attributed to an immature market, says Ali Leach, Learn editor at CoinDesk, a cryptocurrency news outlet. Anything from a celebrity tweet to new federal regulation can send prices spiraling. If Elon Musk puts hashtag Bitcoin in his Twitter bio, it sends Bitcoin up 10%, says Leach. This unpredictability is part of the reason why investing experts warn against investing huge amounts of your portfolio into a risky asset like crypto. Many recommend keeping your crypto holdings to less than 5% of your total portfolio. For new investors, day-to-day swings can seem frightening. But if you've invested with a buy-and-hold strategy, dips are nothing to panic about, says Humphrey Yang, the personal finance expert behind Humphrey Talks. Yang recommends a simple solution: don't look at your investment. Don't check on it. That's the best thing you can do. If you let your emotions get too much into it, then you might sell at the wrong time and make the wrong decision, says Yang. This is the traditional set it and forget it advice that many traditional long-term investors follow. If you can't get on board and the extreme dips continue to cause you to worry, then you might have too much riding on your cryptocurrency investments. The most important thing any investor can do, whether they are investing in Bitcoin or stocks, is not just to have a plan in place, but to also have a plan they can stick with, says Douglas Boneparth, a CFP and the president of Bonafide Wealth. While buying the dip might be attractive, especially with an asset that you really like, it might not always be the best idea at the moment. Thanks for watching, and do not forget to subscribe for more information.